Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, May 6, 2019. All right, interesting movements in the market since last night. Futures were down pretty sharp at one point, and heading into this morning from a tweet from President Trump regarding the trade wars. So that certainly roiled the futures overnight. But as I said, I put up some charts, public charts on the broad markets before the market opened today, and I often say this: don't put too heavy a weighting on what happens in after hours, pre-market sessions, the overnight sessions with the futures. You got to wait until the big boys step onto the field, and that's at 9:30. That's when they come out to play. I'm referring to institutionals, big institutional investors, big funds, multi-billion-dollar funds can't navigate in on Sunday evening at 3 in the morning when the futures are down. They're not sure they can take the small positions, but there's only so much liquidity in the futures market, especially in the overnight and early morning session. Their stocks aren't trading, at 3 a.m. on Sunday night, or 5 a.m. this morning. So again, when you see moves like that, best to wait until you see how the markets evolve. You can see what happens when the regular session starts, because that's when they all come out to play. And we all know what happened today. Futures were down sharply in the morning, and then the market opened at 9:30, and it started going up and never looked back. So let's try to hit on the salient points and keep this video short. So what did happen today and what didn't? We were down. First and foremost, yes, an impressive rally, but no, we didn't close green. And at the end of the day, the most important thing is, how do you close? Not what happens intraday back and forth, but if you're going to take one, if you were only able to take one thing from the price action any day, it would be how we close. Now, there is a story to be told within intraday action and candlesticks, but again, to keep it kind of simple, the large caps closed down today. QQQ was down about 0.6%. SPY was down about 0.4%. And then IWM, which right now, is my favorite of the indexes on the long side, happened to close back up again above Friday's breakout. So the breakout was at risk this morning when the markets gapped down, but IWM managed to post a green close. So you can see they not only saved yesterday's breakout, built on it today by a small margin, but again, it's something. Now, like everything else, like a lot of things out there, there is pretty steep divergences. We're getting close to being overbought again in IWM. So my guess is this: if the broad markets break support, I'm going to give you the support levels, and I'll keep it very simple. This is what I said in today's earlier video for members. Today's lows. Look for the bearish case, look for a break at today's lows. I think that will be significant. I'll get to those reasons in a minute here. In the video I did earlier today, I also covered most of the key sectors in the S&P 500 and highlighted a lot of levels. So again, if you're a member, watch that video, and it kind of makes a case. Whereas the next big move could come, or the next sell signal, if you will, break of today's lows, to keep it very simple in both SPY and QQQ. Whereas I'm going to define some of the recent trading ranges. So if we can break out of the highs of the recent trading range, that could be near-term bullish as well. All right, so there's IWM. That's what it looks like on the daily chart. Let's look at SPY. Red candle today, and it looks like a big red candle. It looks very bearish, but again, we're down 0.4%. So if you take it on face value that we were down, although again, we recouped a lot of the previous losses. So I want to call it a wash. Even though we were down, nothing technically significant happened. How can it, when we already broke trend right here, the trend line? And this is what's going on in the markets. We're grinding around sideways. Volatility has now expanded, just like it did back here, just like it did here. And you get those expansions, you consolidate a while. The last two, we continued up. We just have to see which way this resolves. Again, I'm watching to see if we get a breakdown below today's lows or a breakout above. And we'll go from there. But until then, I guess what I'm trying to say is, don't try to read too much into it. QQQ, we box it in here. You can see the same story. Here's our range. We broke out recently right here. That 187.76 level, I believe I would have mentioned that last week as well. Pretty significant support. We dipped below it just as we did on Thursday. We intraday breaks really not too important on the daily chart. So that proved to just be a whipsaw. We popped below it, and we were only there for a few minutes today and recovered it and stayed above it since. So we're still below the top of, I'm sorry, we're still below the top of the recent trading range, and we're still above the bottom. So take what you want of this, but in order for the markets to really make a pretty sharp move one way or the other, you're going to have to see a break of the lows. Since we've dipped below there twice, again, I wouldn't wait for 187.76. I'd wait for a break of today's lows, which right about, I guess right about where the lows back on Thursday were. So that's the level I'm watching, and I'm putting a higher weighting on QQQ than I am on SPY right now. Although SPY, as I showed you, continues so far to fail at the 2018 highs, whereas QQQ, remember we had a double top right here. We broke out, big impulsive green candle. And so right now, this is simply a back test of that level. And I'll say this, and I've said it before, if you're bullish and long and believe this market's going to new highs and then some in 2019, you want to step in and buy here. Sure, can you undercut those lows and still go up? Yes. So there's your bullish scenario. I don't see why somebody wouldn't have used today's pullback if they're bullish and think the market's going to new highs, why they wouldn't have stepped in and bought. But and you can do so with a stop low. However, if you're bearish and you believe the divergences, everything else will play out, then again, what you want to do if you are short right now, and we have an active short trade on the Qs on the site. I'm short personally, although I'm hedged up with the RTY, the small cap futures. So I'm kind of washed out. I'm waiting to see which way this goes. I'm waiting to see a pretty good evidence that the market's rolled over, and we're going to have to see that a break at today's lows to get that. And if we go up, much above the recent highs, well, certainly that'll take me out of the NQ position, and it'll take our official short trade on QQQ out. It's probably set a little bit above there, and I'll just let the RTY trade ride, right up in the small cap. So there's the range. I think it's pretty clear. And on the futures, let's go to that real quick. Here's the NQ NASDAQ 100 E-mini futures. Again, the primary trend line off the lows has been broken, and we've been stair-stepping lower, but mostly more of a sideways to lower grind. There's that megaphone type pattern. Again, you can see it here on the NQ60, and that's all we did. We came in and hit the bottom of it again. So this is choppy, erratic trading. Market's not going to do this forever. It'll pick a direction, but so far today we came down. Futures dropped there last night, hit that level, and we closed. I pointed this out today in the trading room. 78.04 roughly, a level there to watch. And where did we close here? Looks like we closed, the futures shut down for trading for a little bit, and they'll open back up here shortly. 78.0725, so right about on that level. So I have it about 78.04, and we closed a hair above it. That's resistance, and here I'll zoom in tighter and show you that. So if you're very near-term focused, that's a level to watch. You can see I'm going to show you all the reactions around that area. Quite a few. Capped it there. There was the gap down in the futures, and that's where we closed today. So bulls want to see a break of this high. Bears want to see a break of, again, I think today's lows. I don't think we'll continue to step down in this megaphone type pattern, broadening wedge, whatever you want to call it, for very long. Okay, and let's not forget tech. I've been waiting a long time to see a breakdown in the tech sector to confirm a sell signal in the markets. Whether this sell signal pans out or not, only time will tell, but that's what I've been waiting for, and that's why I'm short the Qs. There it is. So basically today, tech was down big. And yes, sure, the trade wars certainly impact that. The semis were down actually much more than the tech sector alone. The semis are really, one of the most important groups within the tech sector, subsector. But look at that big red candle today. And again, we closed near not too far off the bottom of the recent range. So I'm not going to call it a stick save. I'm going to take it on face value. That is bearish. We're down another. And again, remember, it comes after the breakdown. I had this trend line before. I was running it like this, kind of coming in tight like that, breakdown back test. I moved it down here to call it the benefit of the doubt, catches all these reactions, 1, 2, 3, 4, 5, 6, 7, quite a few reactions, breakdown, back test, and a big red candle. But it would really help to see, help the bearish case to see us take out today's lows, because this is the recent trading range in XLK. In today's candle, we closed right about back on there, up in it, close enough. So again, bearish case, you need to see, let's see these lows undercut. If that happens, then I think there's going to be, I think the broad market will follow. Okay, and just to wrap it up, again, focus a lot on the Qs right now. It's not everything, but it is, what's driven this market up, the FANG stocks and tech. And there's your trend line off the lows on December 24th. Again, broken, but mostly sideways action, and there's that megaphone type pattern there. And let's just see how this resolves tomorrow or later this week. And there it is. When we zoom in on the 60-minute chart, the divergences continue to build, but we'll have to take out those lows right there from the other day. In fact, let me put a line right there before I forget. Set a price alert, although I'm sure I'll know it when it happens. Edit, oh no, set alert. Here we go. All right, price alert's in. And that's it. And likewise, if we pop those highs, let's see what it looks like. Let's see if there's a big green candle through there. A lot of buyers step in, and we take out the top of this, the recent highs on QQQ, being that we've already come in and back tested the breakout level. All right, we're going to wrap it up here. Again, we'll see what happens tomorrow, but 10 minutes of talking on it. A lot of movement in the markets, but again, nothing clearly bullish or clearly bearish today. Just a lot of back and forth. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.